investors.
Nikkei is absolutely flat. The Kospi, though, is trading with gains of over 1%.
Immediate resistance will be the upper end of the falling channel from the highs, which is 23,790.
2 lakh voters are just in the age group of 18 and 19 years old, which is a very interesting demographic.
Almost 23,800 there, 40 high. The Sensex is up about 85 points.
I think the structural story is quite intact in the case of the MCs.
Growth, which we typically look at every year, is in the ballpark of 20% from an annual point of view.
The stock is corrected about 30% from highs, but still trading anywhere between 48 to 49 times FY26 price to earnings.
They expect mid to high single digit, if not double digit numbers coming back very quickly.
We'll have to wait and watch in terms of where the consumption levels kick off.
CEOs will be calling on the Prime Minister on 13th of February in all probability.
Voter turnout has already crossed 25% in the national capital.
It's a quiet day after yesterday's rally, but there is a lot of earnings activity.
Well, there is a lot of earnings activity. That is the day so far. This is Closing Bell, and we are coming to you from the CNBC-TV18 Motilal Oswal Budget Headquarters. Markets are blinking red and green, at least on the Nifty. It's like a traffic signal. But broader markets are surging. I'm Prashant. With me, my colleagues Nigel, Surabhi, and Reema. Guys, hi. Good afternoon.
Hi. Afternoon. What a strong session for the mid and the small cap stocks.
Yeah, absolutely, because it's all about individual, stock movers today more than the index level action. Index, I think, is consolidating, trying to digest some of those gains.
Yeah.
Individual stocks flying away.
Well, that's right, and I think we made this point earlier today as well. The broader markets have underperformed. Now, in fact, maybe if the market stabilizes, the headline index, maybe the broader markets outperform, and that's precisely what's happened. A reverse of what we have seen in the last few days. Headline otherwise was doing relatively better, and the broader markets under some pressure. So your portfolio will be feeling quite good. 3:1 to the advancing stocks.
Just to quickly take it from the top, Nifty flat, Bank Nifty slightly higher, about 0.4% in the green. I'll just put out the levels straight up. Nifty resistance is at about 23,790. We, by the way, crossed it today. Then that's basically the upper end of the falling channel from the highs. The high is only about 10-15 points above that, and then, of course, the market sold off from there. Nifty Bank, the resistance is 59.83. We've not gotten to it at the day high point of the day, but those are numbers to watch out for. Small and mid caps are playing catch up. The small cap index was down 17.5% high to low. As of yesterday's close, it had recovered about 3% from the lows. It's doing more today. That's about almost 2% gain on the 1.9% gain on the small cap and about 1%, just under 1% on the mid cap index. Catch up there. Capital market index is the top gaining index. Now, it's been a while since we've seen that, haven't we? 5% on the Nifty capital market index. And, we've got Vamakshi joining us in just a bit. Defense, PSU, metal names are seeing buying as the dollar has cooled off. I think it's helping. Real estate and FMCG on the other side is seeing some pressure. Reema.
Absolutely. One reason why the headline market, the large caps maybe are not surging away is that there's some sense of caution going by the international cues that we're getting. If you're looking at Wall Street futures, they're fairly nervous after that earnings miss from Alphabet. So in the morning, when we were sort of talking to you, Wall Street futures were down about 0.5%. The Nasdaq futures were down 0.5%. Now they're down about 1% because of this sort of issue with large tech and whether that lead to some sell-off or not. But having said that, that's the large cap picture for us over here. Mid caps, there's so many names to report. To talk about this capital market trust, the market's back with it, and how. Look at stocks like Motilal Oswal, about 12% higher. CAMS is 7.5% higher. Angel itself, which came out with the good update for the month gone by, Angel's up about 6-7% as well. So that's a sort of an extremely strong part of the market. But even some of the asset managers, look at Nippon Life, for instance, mutual fund. So up about 8-9% there as well. So very, very strong. Beyond that, you've got names like AFL, Credit Access, Afcons Infra, many, many names on the upside today. So, yeah, mid caps and small caps, Nigel, that's where the action seems to be.
That's right. And just take a look at Strides Pharma. When the market corrected, I think a week or so ago, or maybe 7-8 trading sessions ago, Strides went down to around 550 rupees. Today, the stock is on the verge of moving to around 750 rupees. There was that corporate action that took place. The stock listed at roughly around 720 rupees. And from there, it corrected close to around 30% in a matter, 25% in a matter of a few sessions. But the pullback as well has been equally swift. And just take a look at that one of the highest traded stocks today at the high point of the day. And, just look at the screen. Religare has been a stock where we've seen massive volumes today. It seems the street believes something's got to give now out here. And that stock as well, I think they have their voting in the next couple of trading sessions. Big volumes on that stock as we speak at the high point of the day. So as you all said, broader markets, plenty of buzz out there. Mitesh Thakkar is back with us though. Mitesh, the index, the Nifty hasn't moved anywhere. But comment on that. I mean, would you look to add some long positions on the Nifty? And the Nifty Bank, that's the one that's leading the way. What's your take on that one?
So, Nigel, been maintaining a positive bias, but, we've seen some slight profit booking happen from the higher level. But I don't think it's something which is very dangerous. I think it's very normal given the fact that we're sitting on a 4 or 5 day kind of a rally. So I think just stay long. Both the indices are showing positive traction on the hourly to hourly charts, suggesting that decline should be used to buy into it. So on a Nifty, if we get levels below 23,700, 680 zones, I think that's my entry point with the stop below 23,590. And I've maintained targets of 24,200 on the index. That's where we are heading. Similarly, on the Bank Nifty, also looking at higher levels. On the stock side, I have a buy on Oil India with a stop at about 422 for targets of around 450. And ONGC is a buy as well with a stop at 258 for targets of 270.
Okay. All right, Mitesh, got that. Thanks very much for the trading calls. We'll come back to you in just a bit. And maybe we'll also, get your take on some of these capital market stocks, because that is the market's big theme today. And it all started in the morning with the Angel One coming out with its update, where though it seems that the net number of clients they're adding, that's reduced actually month on month. But it seems the volumes are picking back up. Let's go across to Vamakshi to figure out what's sparked such fire in the capital market stocks today. Vamakshi?
Well, absolutely, Surbhi. Like you rightly pointed out, the first stock that was on our radar was Angel One, and that is because on the back of its monthly update. Now, when you look at the gross client addition, it stood at 6.6 lakh. This is a downtick of almost 15.4% on a month-on-month basis, and this has in fact slowed down yet again after picking up in the month of December. When you look at the client base, however, it is growing steadily at nearly 2.1% month-on-month. The average daily orders, on the other hand, are seeing a downtick of almost 3.7%, but it is the average daily turnover which has picked up almost 6.3% month-on-month, and this has seen a very good recovery after seeing a very sharp fall in the month of December. The market share as well for Angel One has improved. In the equity market share, the company has witnessed an uptick of almost 31 basis points to 19.7% after declining for 2 consecutive months. For F&O, the market share has seen an uptick of 15 basis points month-on-month to 21.8% after declining in the month of December, and the commodity market share has also improved substantially by 133 basis points month-on-month to 61.2%. So overall, the average daily turnover has seen an increase, and the market share has improved for Angel One. Resultantly, the stock is trading higher in trade. But apart from that, lots of capital market themed stocks are in focus today on the back of a note that came in from Kotak. They say that recent correction across AMCs and RTAs offer a more reasonable risk reward. On AMCs, they expect HDFC AMC and Nippon Life AMC to deliver higher AUM growth over the next few quarters. For ABSL AMC and UTI AMC, they say that they are showing signs of performance revival in select large funds. They're awaiting stronger signals to turn more assertive. So they've gone ahead and upgraded their rating on HDFC AMC and Nippon Life AMC to add. They've upgraded their rating on UTI AMC to buy, and they've retained an add rating on ABSL AMC. Apart from that, RTA on RTAs, the brokerage says that they've upgraded CAMs to add from reduced target price at 4,000 rupees per share. They say that CAM is more reasonable valuations with yield related and capital market headwinds baked into the assumptions. And as far as KFIN is concerned, they like the progress on the non-MF segment, but they're waiting for better entry valuation. So given that factor, they have a sell rating, target price of 1,000 rupees per share.
Thank you very much for that. Prakash Diwan is now with us on the show. Prakash, we got a bit of a correction in these names. It's a cyclical, sector per se. We saw a bit of growth rate moderation on account of that cyclicality. But again, there is buying today, which has emerged. So at every decent dips, we are seeing interest emerging. Your thoughts on the capital markets and the recovery today?
No, absolutely, Rima. So, when the budget announcement triggered anticipation of surplus money in the hands of taxpayers, there was this whole anticipation that this will be used for consumption and spent on buying discretionary goods. But, this is also as much as an avenue for people to spend on or allocate more money towards. And I don't believe that given the secular trend that we've been noticing, and there's a very interesting NSE report that's come up in terms of how the gender ratio is changing towards more women participating in equity markets. You have a younger population coming in. With all that, there's no reason why companies which are part of the capital market infrastructure space will have to worry about where the next revenue growth is going to come from. So very obvious, but within that space, I would still be a bit wary about buying into brokerages, given that it's a very commoditized business. So you had a very great Jan, but whether this continues for the whole year the same way, I'm not too sure. But if you were to buy the K-Fintechs and the CAMs of the world, or the CDSL for that matter, depending on what area you feel is going to grow, CAMs in the last couple of days has also demonstrated a very major support and pullback. So there is evidence that people will latch on to this. Their valuations are quite comforting. And I would also like to draw your attention, of course, it's not directly related to capital markets, but it's more e-governance. But there's a company called Protean e-governance, right? I mean, we've heard of this. The numbers are very encouraging. This is a stock that went all the way to some 1350 last month. And it's bounced back $200 from there. And it's still 30% less than its peak valuations. So, of course, at 65 times, I don't think it's cheap. But given the fact that it's a unique business in that space, I think people will kind of see money getting allocated to this on every dip because you don't get these stocks at softer valuations. So if the market's giving you that opportunity, I think it's time to buy these kind of businesses which are unique, which have a moat, and which have clear visibility in terms of the growth ahead. So yeah, it's quite promising. NBFCs and all could be confusing. There's an interest rate cut that you need to kind of anticipate and build in. But these are businesses that will grow irrespective of how things shape up on the economy as a whole.
Yeah, absolutely. Protean e-governance, company that engages in providing a lot of the back-end digital infrastructure when it comes to the whole tax administration system, whether it's PAN cards, etc. That's one of the big businesses that they have. And it seems that's a story that Prakash likes. Okay. Prakash, let's talk about what's happening with consumer stocks. And I want to throw Titan first at you because the debate is wide open. On one side, there is this whole consumption thrust and the rich will spend come what may, tax cut, no tax cut, whatever. But I think, and this quarter, one can still argue and give them the benefit of doubt. There was an inventory issue and all of that. We had a pretty spirited discussion with the management on lab-grown as a threat and whether Titan can overcome this or not, because their studded ratio is also inched down slightly. Carrot Lane's growth is not as much as what it used to be. What's your sense? Is this a great time to buy a stock that has always been super expensive, or would you not jump the gun so quickly?
So, Surabhi, this is a great stock if you have loads of money to allocate, and that kind of makes a lot of institutional investors qualify to buy into this. For you and me, you would need to buy into stocks which have a significant alpha generation potential. From here, if you really ask me, from 3,500, does Titan kind of become a multi-bagger? Given the level of details that we have on these businesses and the sharing that the company does, you'll not be caught unawares, right? So if there's something good that's happening in some of its businesses, and I can tell you their gemstone business, which is under a brand called, I think, Zoya, if I'm not mistaken. That is something which has been doing very well. Anecdotally, I can tell you the kind of response it has and the kind of new launches that they have, the way they're expanding even internationally now. So there are things which will offset this LGD debate that we keep hearing about. And of course, LGD will keep growing because it's a new thing. It's more affordable, different segment that it caters to. But I don't think you can take away the sheen from Titan's business. It's just that it'll probably be a bit range bound for some time, and then the valuations start coming into picture, and that means it's a bit expensive. Even now, you'll probably have to buy it on bad days when something goes wrong somewhere in the world, and the market takes a beating. So it's those kind of stocks that you'll need to add on difficult days. But otherwise, I think basis numbers, there's nothing very promising that you need to kind of rush into adding it.
Okay, all right. Prakash, I just wanted to ask you about Page Industries. The numbers came out, didn't look too bad. They're talking about, the management was saying that the last quarter was good because, it was festive season and all. And the commentary, I think, for the way ahead was sounding a little bit skittish. I'm not sure how any additional income or seasons, etc., affect this business. But at least for the time being, the stock has come off close to 4% from the top. What's your take on Page Industries at around at this 46,500?
So, Nigel, this is very similar to Titan. It's a market leader, will keep losing market share and has to claw back to gain market share. The business is nothing which can spectacularly or radically become very different. I mean, is there any disruption that they are likely to come up with which can make things easier on margins or on operating leverage? The answer is possibly not. So it's a fairly steady state, mature business. And this will just go along with the consumption theme. If the consumption picks up and we have this, index that also tracks that in certain quarters, if that index were to do well, of course, Page Industry does well along with. But then there's a huge amount of cost pressure that's attached to this business now. Because the A&P costs have actually not come down. They might have come down as a percentage, but in absolute terms, they still have to spend to manage that market share. And the expansion of stores also has not been so dramatically different. So I would believe it will have to consolidate a bit, and the business will have to kind of start looking up more differently, and maybe some new lines of SKUs that could be added and things like that. So we give it some time. They are trying. I can sense that they're trying to. If you walk into a jockey store, you will see that it's no more, the same products that you had, let's say, 5 years back. There's many more things that they've added, and they'll continue to deepen that as market feedback comes back to them in terms of positivity. But till then, I think they're still work in progress, and you'll have to wait for the stock to really shine.
Okay, that's the view on Page Industries. Oil and gas is having a good day. The Nifty Oil and Gas Index is the top sectoral winner, 1.7% up. Names like ONGC and all the oil marketing companies are higher today. In fact, OMCs have got an upgrade from Goldman Sachs today. Sudarshan joins in with the details. Sudarshan.
So oil marketing companies are down somewhere in the range of 20 to 25% from their peak. But in the last two sessions, all these three oil marketing companies, IOC, BPCL and HPCL, have moved higher somewhere in the range of 4 to 6%. Even today, all these three stocks are higher. And today, Goldman Sachs has come out with a note upgrading all the three stocks. It has upgraded HPCL and BPCL to buy. And for HPCL, target is rupees 400 per share, implying upside of nearly 17 to 18%. For BPCL, target is rupees 360 per share, implying upside of almost 40%. But as far as IOC is concerned, it believes that from current price, it might see a fall. And as for GS, target for IOC is rupees 110 per share. For HPCL, it says it sees 40% EBITDA CAGR over FY25 to FY27. For BPCL, it estimates free cash flow of 10% in FY26. And for IOC, it believes that risk reward is favorable. Now, giving the thesis behind the upgrade, it says as far as risk related to lower crude discounts and LPG under recoveries are concerned, this is factored in the prices. And setup for FY26 and 27 is improving for OMCs, given crude oil price upside being capped. For GS, by 2025 year end, GS believes that Brent crude will be around $70 per barrel. Also, it is constructive on Singapore refining cracks and free cash flow. That is a key metric. It expects that it might recover in FY26. So, considering all these factors, GS has upgraded all the three oil marketing companies.
Thank you very much for that, Prakash. Any pick in the oil marketing companies? Goldman believes that the concerns surrounding LPG under recoveries are priced in, and two, crude oil prices are capped going forward, which sets the companies up well in the coming years.
Yeah, I do agree. I think the theme is very, it's kind of very aligned to what we also feel on this. And remember, because of that LPG subsidy, under recoveries, you already have the stocks having given way from their, recent peaks. What's also, part of the same report, and I agree to this metric, is, the kind of growth that they are anticipating in the next 3-4 years on an EBITDA level is phenomenal. I mean, you don't find these kind of large businesses being able to clock such 40% kind of growth. and look at the replacement cost thesis. I mean, none of these companies would be easy or even possible to make at the same cost that they're available at. So, you know, the only discount to valuation that comes up, Rima, is because of the regulatory overhang. I mean, you really don't have much of freedom that these companies can exhibit in terms of pricing. And when things go adversely on the crude, global crude prices, that is when, they start getting hit and there's no stoppage. So I think primarily it's because of that uncertainty that they've never been richly valued, but they're still available at very decent valuation from a long-term dividend yield portfolio as well. I was just calculating if IOC at this level were to be bought and if it continues to throw up that kind of cash and pays out that as dividend, the yield itself will probably set off a lot of the uncertainties, and at least you'll have something which is not disappointing in terms of a regular income coming on a yearly basis. Till you hold on to it and there's some value appreciation or value migration, as we call it, over the next couple of years. So great stocks to have in portfolios. They give you that solidity from a dividend yield perspective. But I like IOC particularly, given its large network and the kind of refining strength that it has as compared to the other.
Okay, all right. This is, of course, a story coming through from our colleague Parikshit. Now, Prime Minister Narendra Modi will be visiting the US next week. Sources suggest that US President Donald Trump may host PM Modi for a dinner. He's also expected to meet Elon Musk, who's, of course, very much sort of associated with the government and its efforts to cut the size of the US government for one. Let's go across to Parikshit now for details on this important upcoming visit. Parikshit, over to you.
Well, yes, Donald Trump is likely to host Prime Minister Modi at the White House on 12th evening. 13th of February will be the day of substantial meetings where Prime Minister and President Trump will have a one-on-one bilateral meeting and delegation-level talks. There will be a group of CEOs who will also call on Prime Minister Modi. We believe that this meeting of business leaders is being organized by the National Security Council, which is a part of the White House administration as well. There could also be a community event where the Prime Minister will speak to the Indian community, as he has done on previous occasions. What's going to be the larger push? In fact, we're learning from sources that the intent would be to declare a strong feeling, strong support for an early trade deal between India and the United States. In the run-up to the US elections, we've heard how a Republican administration may be very keen on a trade deal with India. And now we hear that there is a clamor on both the Indian and the US side for a trade deal. And Prime Minister Modi and President Trump may not sign a deal immediately because it's too soon, but they may declare their intention to conclude a deal within the next 7 to 8 months and possibly sign it when Donald Trump visits India this year for the Quad Leaders Summit. So that is something we'll have to wait and watch out for. How will we tackle the trade deficit or the trade surplus that we enjoy with the United States? Well, there are a couple of options that the Indian government is working on. On the defense side, it is quite possible that we may offer to buy more P-8I reconnaissance aircraft for the Indian Navy, C-130 Super Hercules aircraft, also for the Indian Armed Forces. So these could be some major purchases from the US government, from the US defense industry, which could help bridge the trade deficit. There could be more energy imports, both crude oil and LNG, which could be on the cards as well.
Okay, all right, Parikshit, got it. Thank you very much. That's a neat summary on what to expect. Thanks. That's quite helpful. High-profile visit all set for next week. Well, with that, we do have to take a very quick break. We'll come back on the other side and, of course, get you more on the markets. Aman Chauhan of Abacus Asset Management will be with us in just a bit.
Okay, welcome back. We've got the market, which of course is flat on the frontline indices, but broader market is buzzing. And now Aman Chauhan is fund manager at Abacus Asset Manager. Aman, good to have you back on the program. Thanks very much for your time. For those with cash, it's your stock to pick, whatever. But you have got to have cash, right? When market falls. And I think that's the conundrum many face. They just sort of they went up with the market, came down with the market, and now waiting for the market to repair. Are not able to do very much. But people have cash as well, and they are, I guess, doing stuff. So what is the team at Abacus really doing? And let's just take it sector by sector in that sense. We just had, Vamakshi earlier outlined this Kotak note on capital market plays. The capital market index is up some 5%. K Fintech, CAMS, CDSL, the asset managers. Any thoughts on the space broadly, and have stocks come to attractive levels?
Yeah, so this space looks interesting to us. We also have exposure to some AMC companies. We have exposure to wealth management companies, and that space definitely looks good. Even if the markets were to stay flat for the next 3-6 months, still the earnings growth momentum in most of these names will be strong, and it's a low capex intensive business, so good free cash flow conversion happening here. So we are also positive on this space, and as I mentioned, we do have some exposure here.
Okay, capital market plays and AMCs, not brokers, right, Aman, or brokers as well?
We have all three, but they will be like low single-digit exposure each of them.
So at these levels, Aman, what are your high conviction bets? If you have fresh money, where are you, putting it, deploying it?
So financials continue to be the top pick for us sectorally, both private banks as well as non-fund based financials. Besides that, we are positive on pharmaceuticals, and on the fringe, even IT now started to look interesting, especially the mid-cap IT space, which has corrected. So while the large cap IT is not, the mid-cap definitely has corrected. So that is also now looking good. The currency is benefiting this, and plus if US economy is going to stay strong and the way Trump is announcing the measures, looks like there can be demand pickup for these sectors also. So these three would be the top three priorities as of now.
Okay, all right. Hi, Aman. Good to see you in. Aman, what about the chemical space? That was an ignored sector. Around 18 months or so ago, these stocks ran up maybe ahead of themselves, and then they went through a painful period. But now the recent numbers that have come about, they are showing some encouraging signs. And I think from the next quarter onwards, you'll have the benefit of a lower base. How are you placed on chemicals from here?
So incrementally, we are also positive on chemical. In fact, in the last interaction, I mentioned that the sector is bottoming out. It's not yet bottom out, but it is in the process of bottoming out, and in the next 3 to 6 months, it should happen. We have seen first green shoots of that happening, where we see the numbers from UPL and many other chemical companies where the inventory has come off and even the pricing has stabilized. So clearly, sector looks good. The only caveat being that it is dependent on China. So at least in the near term, I'll not be a very big buyer in chemicals because of the global uncertainty. What happens when the Trump announces certain measures and what counteraction China does, we need some clarity there. Once things stabilize on that front, then we can say that fine, the sector has clearly bottomed out, and based on that, we can take an aggressive call. So on the fringe, we are positive, but not very aggressive in the sector as of now.
Aman, what about a stock like Trent? I know you don't talk about individual stocks, but a high growth consumption name, a darling of investors. I was giving you strong growth. Look at this share price of Trent. It was up 2.5%, rebounding after yesterday's steep loss of 6%. But that's being sold into. Trent is completely flattened out. So investors are concerned about aggressive competition in this particular space.
Not just competition, is also the valuation, right? So consumer space in India is always traded at premium valuations. While the budget narrative clearly was pro-consumption and these stocks saw a rally post that, I believe just one of the days when people are booking some profit and using that money to get into a pharma or get into something else which has underperformed versus the consumer needs. But I don't read too much into today's activity as such. Company is good. The whole sector should do well based on the impetus the budget has given the whole consumption sector as such. So the space looks good. If somebody is not too worried on the valuation front, this sector can still give you decent returns. At Abacus, we follow that value conscious style of investing. So for us, we feel shy of paying a very significant premium. Even if the growth is decent, we would like to have a decent valuation, and hence these sectors don't feature much in our portfolio, but overall sector should continue to do well.
No, sector should continue to do well. Look at Credit Access. I mean, just making a quick mention, there are some big movers in these names. Credit Access is up another 7%. So it's basically back to about 1100 or so. Recent high was about 1120. Medanta is a big mover. That's a 10% jump. Medanta did not correct in this current leg of the market, but of course it made a high back in May of 24, about 1500. And since then has been consolidating. Another hospital name is Fortis. Fortis did come off quite sharply. Jan 2025 was nearly at about 750 and fell to about 580, back at 680 this afternoon today. So yeah, I mean, there is a lot happening. IGL is up about 6%. There is Oil India, which is up about 6.5%. The capital market plays, I think we've already been highlighting. Thangamile reported numbers just about half an hour back. Stocks up 10%, and I think it started moving post the results. Tega Industries, which is largely, I mean, it works in the steel industry. It's a ancillary, but high was 2,400, late 24. It fell to about $1,400 and coming up to about 1,650 with the jump that we are seeing today. So lots of stuff. Hospitals, Aman, do you own them in your portfolio, and what's the thinking?
Not as of now. We are neutral on that sector, so there is no specific bias towards it. But as of now, we don't own it. Something interesting comes up, we are open to that idea of looking at them.
Okay, the three sectors you mentioned, those are which ones, Aman?
Financials is one, pharma is
okay.
next, ITs, midcap IT is something that is looking good.
Okay. And in financials, you said both banks and non-banks. How important will this RBI meeting be? So 25 basis point cut now largely is expected, but expectation is that maybe there will be something more on liquidity, etc. as well, and that's important for the system more than it has been for a couple of years now. What's your sense, Aman?
I think RBI has already acted on the liquidity front 2 weeks back, so I'm not expecting any major moves from the liquidity front, and that is something which the RBI can act ad hoc any point of time. So they will not wait for the policy day to do something on that front. So at least that's not what we are expecting. In general, we are expecting 25 to 50 pips rate cut to happen in India. Not a steeper cut than that, because that will have an impact on the currency, and we are already seeing new lows as far as the currency is concerned. So the RBI has to balance that. But nevertheless, we are along with the consensus expecting seeing 25 to 50 pips cut over the next 12 months.
On midcap IT, Aman, would you go with high growth companies like Persistent, Coforge, where there is visibility of growth continuing, but these stocks are expensive relative to the rest and even relative to their own historical standard? Or would you go with ER&D company, where the growth outlook is moderated a bit given the concerns in Europe, etc., or some of the other midcap IT companies which have struggled on the growth front, but there is valuation comfort?
The preference will be for growth. And obviously, we'll try to find something where the growth is reasonable with a reasonable valuation. So it won't be just blind growth at any price, but clearly the preference is for the growth. So if the company is struggling, in spite of the valuations, that is not something that we'll consider.
And there are companies, because the likes of Persistent, Coforge, for instance, have become very expensive. So are there companies to buy at these levels where there is growth visibility and valuation comfort?
Yeah, definitely. I think it makes sense to look at that segment where growth visibility is high, because this is what India is known for. This is what investors are looking forward to. So in a year when we are expecting a moderate GDP growth to come in the next year, and the markets to be, say, flattish, at least in the near term, it will be individual stock-specific ideas that will make money. And within that, whichever stocks has a growth visibility or delivers growth, I think the investor preference and limelight will be in those names.
Aman, thank you very much for joining in. Need to get into a short break. Before that, let's hear out Titan and Asian Paints, both the stocks under pressure post the Q3 numbers. Listen in to what the management had to say about the quarter gone by and the way forward.
the growth which we typically look at every year is in the ballpark of 20% from an annual point of view. And that's the kind of thing that we would be satisfied with rather than continuing to maintain the 25 in every quarter. So the long runway in terms of growth and our having just a single-digit market share, our focus continues to be on sales growth and with a stable margin around that 11% ballpark. That's what I would gun for. That's what we are pushing for.
I think what was very clearly visible was that the urban centers were not batting. And as you rightly said, there has been down trading in terms of the market, in terms of what we've seen. I think what was more complex also that, the festive season was very, very short. It was a shorter Diwali to that extent. So as we see, I think the month of October really kind of impacted us very highly in this quarter to that extent. So I think that is what possibly has impacted the overall growths in terms of what has come in. As we go ahead, we are looking at single-digit volume growths for quarter 4 for definitely in terms of what we would kind of really endeavor to get as we kind of go forward. Competitive intensity has been pretty strong in terms of what we have seen in the first 9 months. However, I see is that, given the fact that it's not only about 5 players at the top, it's also about, 10 to 12 players now batting to that extent. There have been even more competition which has come in terms of a lot of newer players other than one of the bigger players which has kind of really stepped into that extent. So I think we are definitely seeing, some readjustment of shares across a lot of players to that extent. So it's not something which is only one player is kind of experiencing it. It is all across, and a lot of these shares are getting adjusted across the unorganized sector as well to that extent.
Welcome back. Well, markets have come off a little bit from the top, but the big story is actually the broader markets, and that's looking beautiful. 3 stocks advancing for 1 stock that's declining. In the last few minutes, though, if you were to pull up the Nifty and see what's come off a little bit from the top, where we have Adani Ports, that's skimmed off close to 0.5% of the gains, and Power Grid as well. I think that capex number is spooking the street. Along with it, you have Axis Bank that was in the green when we started the show. That's moved into the red. But Nimesh is with us to help us out with how are things looking in dealing rooms. Nimesh, first of all, congratulations.
Thank you.
We asked a lot of guests in the last 5 days. Please tell us what about the FIs. Everyone said maybe sometime in the second half. You told me next 3 hours, Nigel, the FI numbers come in, it could be positive. Yeah. So good on you on that one. What about today? What's happening?
So Nigel, while I said yesterday the buying was largely passive and it was related to large caps, today there is a MOC basket buying in the broader market stocks, and I guess that's the reason why the broader markets are relatively outperforming today. It may not get showed up in the FI number because if there is a large selling in some large caps, it may just shadow. But clearly, from a flow perspective, there is an MOC basket, is what I understand, in the broader market stocks today. In terms of sectors, again for the last few days, I've been saying consistently that there is buying in real estate names and there is a bit of buying back in the PSU stocks as well. So that trend continues even in today's trade. So those 2 sectors, I guess for real estate, it's a bit of a pre-positioning to the RBI policy, and maybe the street is now anticipating or penciling in a 25 basis point rate cut. From a technical point of view, again, 23,300 is a level to watch on the downside. But from a trigger point of view, the RBI policy and the state election outcome is very important trigger to watch out. The exit polls to which we will react tomorrow, and the actual results will react on Monday. But again, the feedback is if there is a positive outcome, you might say a bit of a sentiment booster as well for the bulls to rally from here. So that's the overall feedback. But from a flow perspective, as I said, there is a basket buying, is what I understand, in broader market stocks.
Well, indeed, and that will be good news, right, Nimesh? And if you look at the real story today, it's in the mid-cap space, and the small cap is up nearly around 2%. Yeah. But individual stocks, tell us what you pick up.
So in terms of individual names, the first stock is Paytm. Again, in the last couple of days, the volumes have picked up. I understand some large HNI investors are active buyers as well. And of course, for Paytm, there is an anticipation that it could be a corporate development very soon. Remember, in Paytm, there could be a large block as well that I highlighted a few days back. So that's still pending. But of late, the HNI flows have resumed in that particular stock. The second stock is Union Bank. Within the PSU bank basket, this is one stock which is well bid for the last couple of days. Post earnings, this is the only stock which has relatively outperformed the entire PSU basket, largely on back of FI buying. So it looks like some institutional interest is back in Union Bank. The third stock is Signed. From the recent lows, even that stock has pulled back smartly from in the last couple of days. There is buying flows, is what I understand. But for Signed, the biggest trigger will be the appointment of the new CEO. Well, in the call, they've clarified that it will come before the next quarter earnings. But maybe the street is anticipating that can come very soon. So that's the trigger in Signed. And the last is Century Ply. Within the broader market names, this is one stock which is, again, well bid by large institutions. The delivery volumes are going to be quite high in Century Ply today.
All right, Nimesh. Paytm, Union Bank, Signed, Century Ply. That's stocks we'll watch out for. Street expecting a corporate development soon in Paytm. Keep an eye on that one. Stock
and Signed is up 4.5%, the one he was talking about.
CEO development maybe sooner than expected. So Mitesh is with us, back with us with a quick view on what he's making of the trade so far. And Mitesh, a bit markedly lower now, 45 down on the Nifty, was absolutely flat, 23,693. But broader markets are looking very strong. What's the trade?
Yeah. So I think, the breadth is still looking good. The mid-cap Nifty index has given a bias. The positive bias should be maintained. BTSC and Wipro can be taken with a stop at 314.5, targets of 320, 322 for tomorrow. And the other one is a BTSC and Union Bank with a stop at 117.7 for targets of 122.
Okay, all right. Those are individual trades coming through from Mitesh. Mitesh, thanks very much for that. There was this SEBI rule on when to categorize a company in default. And we'd reported this earlier. This is, of course, something which has put a company or two in a pickle for a while. The latest sort of casualty, if I can call it that, is Arohan Financial Services, which was downgraded to default rating due to an interest payment delay caused by incorrect account details. But it was almost immediately upgraded by the same rating agency. In this case, Ikra. Ritu is here with details. Ritu.
That's right, Prashant. Minor delays due to operational issues often can lead to some big consequences. In this case, it is an A-rated company, that is Arohan Financial Services, which has faced, the ire because of the SEBI's November 2024 rules that recognize even a 1 rupee delay to any one investor by even 1 day will be categorized as a default, and there's no such thing as technical default that will be allowed for. In this case, Arohan Financial Services delayed or rather could not pay about 6 debenture holders about 44,000 rupees in total, because of which the account was downgraded to a default rating by ICRA and subsequently upgraded, recognizing the fact that there is no real liquidity risk there. We had a similar case happening with Axis Finance that you spoke about. That was a AAA rated company, again downgraded to default and then subsequently upgraded, all owing to these SEBI rules. It can cause some kind of issue, especially when it comes to listed companies. There may be volatility, even in the case of unlisted companies, whether there's an NAV hit or something that could happen. So, these are big consequences that can happen because of minor issues. Keep in mind, so far, it's only a couple of NBFCs that have faced these concerns. Could happen with anyone.
Thank you very much for that. By the way, tomorrow is going to be a big earnings day. You've got Bharti, Britannia, Hero MotoCorp, ITC, State Bank of India and Trent. But let's zero in on Trent, because Trent has lost nearly 7% in the last 2 days. And numbers come out during market hours tomorrow. So Mangalam joins in with the street expectations.
Well, for Trent, the company reported a near 39% revenue growth in the last quarter, but that missed street expectations, which were that of 45% sort of growth this time around as well. And from there, we saw the stock correct, down about 30% from the highs. The question this time around is that with a slightly, subdued revenue expectation of 35% in the festive season, with 33.5% EBITDA expectations and net profit growth of almost 40%, will the company beat these estimates, meet these estimates, or miss these estimates? The second question that arises after that is, after beating these estimates, will the stock regain its past glory or not? Largely because between the last quarter to now, a lot of the underlying narrative has changed as well. There is competition coming in the value fashion space itself, and everyone talking about the multiples at which Trent trades at as well. So, it's a very interesting set of numbers that the street is anticipating. There would be slight margin compression, and that's largely by design, because the company has been leading, with Zudio store addition, and Zudio typically has lower gross margins and lower EBITDA margins than the overall part of the business. So if Zudio has led growth, then margins will compress. The most important thing we'll be watching out for, apart from these numbers, is what are the new platforms that the company is seeding to replicate the sort of success that Zudio has seen. The street has bet on, its ethnic wear business or even the Star portfolio business. So let's see how that comes about. But for now, 35% revenue growth, 40% PAT growth with 33.5% EBITDA growth is what the street is expecting this time around.
Okay, all right, Mangalam, thanks a lot for that. Mayuresh is joining in. Mayuresh, good afternoon. Good to see you, Ben. What's the view on Trent? I believe you have been shopping. But that aside, what about the stock that around 8,000 rupees was the darling? And from the top, it's seen a good correction, but you've seen it bounce back in the past. I recall it doing a very swift move from 6 to 7,000 rupees. Given the growth, given the competition in the industry, put everything together, and at these valuation, what's your view?
Afternoon, Nigel. No, so as a disclaimer, I think a few months back, we didn't have it in our portfolios, but we did take it out. I think we booked our profits in because I think the valuations were, in our opinion, just not tenable. And even now, our sense is that valuations still look very, very expensive. The ratings are on the softer side as we see it in the markets with India. And therefore, the points that Mangalam put out, how does volume growth take place? What is the core dynamics as far as Zudio is concerned? What are the different lines of segments they are planning and expecting to introduce and execute over the next few quarters? And at the same time, how is the margin performance going to be? Again, I think the base that they are working on over the last 2 years, they had compounded their earnings at a historical run rate. And therefore, I think catching up to that base will be a tall ask. Customer sentiment is obviously weak. You've seen consumption slow down in its real sense, probably play out on a lot of players. And Trent might also probably bear the brunt of it. So again, waiting out for what numbers will come out tomorrow. But even in that scenario, I think the valuations still look very, very expensive for Trent.
Okay, all right. Mayuresh, we have to take a quick commercial break here. So allow us to do that. We're going to just come back. That's the view on Trent, but more stocks with Mayuresh in just a bit.
Welcome back. Now let's bring you voices from the CII. CII President Sanjeev Puri and Pidilite's Bharat Puri have welcomed the budget as they expect the announcements to boost consumption. On the other hand, the steel industry is still hopeful for some protection and they're hoping to hear from the government very soon. Listen in.
Very strong point in the budget was the focus on reforms. And which is very critical to unlock the potential of the economy in the medium term. So the journey of economic, it's a journey of economic transformation. It's not that, things change overnight.
Yeah.
But I think all the factors are favorable. So progressively, we do feel that improvement will happen. And the consumption boost is welcome. I think with the weather being better and agriculture crops being better, and hopefully we are also expecting some, the liquidity part the RBI has been acting on.
Yeah.
We also expect the interest rates to moderate soon.
I would say, Shireen, this budget is very welcome. In our opinion, the economy needed capex, it needed consumption, and it needs jobs. Capex is continuing. Hopefully consumption will get a boost. It will take 3 to 6 months, but it will definitely get a boost. And jobs will obviously follow both consumption and capex, and hopefully skilling and ease of doing business. So overall, from a demand perspective, I would say we're now positively optimistic rather than cautiously optimistic.
How do you see the capex story playing out from here?
So I think India is on a multi-decadal path from a growth perspective. The enablers of capex, last year when we had about 11 lakh crores on infra spending, and obviously public spending is a big part of the push. So I think there is going to be, at least from a heavy capex perspective, there are opportunities to grow, but the environment, especially because in a company or a industry like steel, it's a globally exposed industry. We just need to ensure that the enablers from a policy point of view do not expose us to...
You mean the safeguard duties?
Yeah, the unfair, because that's unfairly priced imports. And I think Indian industry, from a steel perspective, is very competitive, but it has to also earn its cost of capital. And therefore, we are ready as an industry to expand very significantly. We just need those enablers and efficiency in the system to be in place. The prices is what gets affected by these unfairly priced imports. I think with the tariffs coming in at this point of time on China, the key issue will be what will be the impact on the rest of the world, because it's not that the Chinese imports or exports made big difference to the steel prices in the US. But I think it will be important to see as to where that goes in. More importantly, the domestic policy and the stimuluses in China is going to determine where the exports come in.
Still in conversation with Mayuresh Joshi. Castrol, by the way, has been a big mover today. It was up, in fact, this whole week it's up nearly about 10% on the back of their numbers. Mayuresh, any thoughts on these oil and gas companies or companies which feed into stocks like a Castrol?
So I think, Reema, afternoon to you as well. I think Castrol and its closest competitor, Gulf Oil Lubricants, I think you can probably keep a watch on Gulf Oil Lubricants. Numbers have been relatively better so far. The expectations in terms of volume growth expected to hold out for them. And therefore, I think if you probably look at the entire ecosystem, volume and pricing will both play an effect in terms of how the balance sheet is expected to grow. And therefore, the EPS rating probably looks far stronger at Gulf Oil Lubricants. Having said that, I think the kind of exposure that they might have in terms of data center as an opportunity, they're getting into the charging infrastructure space as well, both through the fast charging and the slow charging module, which they believe can be a game changer going forward as well. So the space is interesting. Gulf Oil Lubricants is something to be kept in mind.
One of your own poems has a beautiful Bengali phrase, Mayar Mukt Swargo Sukh. It translates to a mother's space is the bliss of heaven. It reflects the cultural sentiment in Bengal and beyond, where a mother's love is considered sacred and divine. Empathy for the common people is the guiding principle on all your policies and welfare schemes. This is most striking, seen in your initiatives for the education of the girl child, women's empowerment, and poverty alleviation. All of India needs this kind of inclusive and sustainable model of development so that no Indian is left behind and no region in India is left behind. Thank you for your leadership, Mamta Didi. Esteemed friends, in today's fast-changing world, India has become a beacon of growth and hope. Within this fast-changing India, Bengal has become a source of growth and hope. Therefore, it is the best time for investing in Bengal as we are marching towards leadership based on technology and the power of our youth. Bengal's strategic location and fast improving physical infrastructure gives the state an enviable edge. But the biggest asset of Bengal is its people. Over 100 million hardworking, extremely talented and highly cultured people. In the emerging era of knowledge economy, your state has a special advantage because Bengal has always been a land of super intelligent people. When natural intelligence is enhanced by the capabilities of artificial intelligence, there is no way that Bengal can fail, and no power on earth can stop Bengal's resurgence. Distinguished friends, Reliance's commitment to Bengal's all-around development remains unwavering. In 2016, when I first attended this summit, Reliance's investments stood below 2,000 crores. Today, in less than a decade, our investments in Bengal have increased 20 times, and we are invested over 50,000 crores of rupees. Mamta Didi, we shall double this investment by the end of this decade. More importantly, our investments have created over 1 lakh direct jobs and spurred significant economic growth in West Bengal. Today, I want to make 5 specific commitments. First, digital infrastructure and services. Back in 2016, Jio opened its commercial operations from Calcutta, this very city, the city of joy. This auspicious launch has proved, Didi, very lucky for us. It not only triggered a digital revolution across the whole of India, it transformed India into a digital superpower. Today, Jio is not just the #1 digital services provider or the data